As part of our Wealthwoke journey, we're looking to identify and interrogate some of the best investment opportunities out there so that you can make informed decisions on where to invest your hard-earned money. This week, we interview Chris Eddy of 10X Investments, and we chat to him about the 10X Investments High Equity Fund. If you're looking for a fund that is cost-effective, simple, and transparent, you're going to want to watch this interview. Enjoy. Chris, I'm 42 years old, and I'm looking at what are my options for my retirement annuity fund. Now, tell me about your range of products or your retirement fund solutions, and which one would be the most appropriate for me?
I think 10X Investments is quite different to the rest of the industry. We really only have what we call our one solution when it comes to retirement investing. We don't have many different options. We've really spent a lot of time looking at the right construction of a product that will lead all of our clients to ending up with more money when it matters most. So really what that boils down to is if you have more than 5 years to retirement, you're in a high equity balance fund, so our 10X High Equity Index Fund. And the way our one solution works is as you get closer to retirement, we really de-risk your portfolio. So we will move you to sort of a medium equity index fund as you get to 5 years to retirement, and then with 3 years to retirement, you're in a low equity index fund, and in the year of your retirement, you're in a defensive index fund.
Okay, so I'm in the high equity portfolio, but what happens when I get older? Who makes the call and when, and who's watching it to make sure that then I am invested in a more appropriate, say, lower equity portfolio as I get older?
So we've managed to automate the process. So effectively what happens is you provide us with your expected retirement date, and that goes into the system. And then on your birthday, the month of your birthday, as you get 5 years to retirement, you'll be moved out of high equity portfolio into medium equity portfolio. And then in the month of your birthday, 3 years to retirement, you'll be moved into the low equity portfolio, and 1 year to retirement into the defensive portfolio. So that whole process is automated and taken care of. And it's kind of a way to think about it is almost sort of your savings and retirement plan is kind of on an autopilot that matches your time horizon with your ability to bear equity risk.
Okay, tell me a little bit more about the underlying assets that the high equity fund is invested in.
Sure. So 50% of the high equity portfolio is invested in SA shares. Because our focus is saving for retirement, we've got a big focus on diversification. So our SA equity bucket looks at the top 60 shares on the JSE and puts a 6% cap on it, because we don't think it's prudent to be overly exposed to any one company when you're saving for potentially 40 years. We know that markets are cyclical. If you think about the 2000s, it was the tech bubble, early 2000s, 2008, 2009 commodity bubble. I mean, if you go back to when 10X was launched, Anglos and BHP Billiton made up sort of north of 35% of the index, and you saw what happened with the commodity.
So you're saying that you only invest in the top 60 shares in the South African bucket?
Yes.
You only invest in the top 60 shares on the JSE, but you can't invest more than 6% in any one share?
Correct. So what we're trying to address is concentration risk.
Okay.
So it's not specific to South Africa. A lot of emerging markets suffer from concentration risk. We'll have one or two really large companies that dominate the equity market, if you're looking at it from a sort of a market cap basis. And we don't think it's prudent. I mean, today Naspers is really that company in South Africa, and we don't think it's prudent to have 1/5 of your equity exposure sitting in one company.
And do you trade in and out of shares regularly, or is it more you set the amount in each share and you just let it run?
So we set the rules sort of from inception, and we don't make any active decisions.
So you're a passive, you would classify yourself as a passive manager.
Correct.
When it comes to that?
Correct.
Okay, so that's the SA portion. All right,
Yep.
The rest, what about the rest of it?
So let's divide it. Let's look at it still on the sort of spectrum of growth versus defensive assets. So the other growth assets, we have 5% to SA property, and then 22% to international equity, which is split between emerging markets and developed market exposure.
Also in an index style.
Correct.
What indexes do you then?
So in the international piece, we track the MSCI World and MSCI Emerging Market indices. And then on the defensive side, we have exposure to SA government bonds and inflation-linked bonds, as well as SA cash and US dollar cash.
Okay, tell me about the performance then. It sounds quite in line with the thinking out there that index investing does seem to, as a core approach, does seem to have value. How has your performance been versus sort of its benchmarks and also against your competitors?
So there have been index funds available in South Africa sort of going back to the early 2000s, but in terms of one multi-asset index fund, I think the 10X fund has the longest track record. We launched in the beginning of 2008, which is quite an auspicious time, given the fact that it was quite soon followed by sort of the crash in 2008, March. I think the market bottomed out. And since then, I mean, looking back, we've now got over an 11-year track record. Our 10-year returns at the end of March, we're looking at 13.1% per annum over that period. So
how does that compare to sort of some of your competitors or?
So we sort of generally compare ourselves to, so at 10X we only have our one best investment view, right? That's our high equity portfolio that more than 90% of our clients are invested in. So we like to compare that to all of the other providers' best investment views, because we think everyone should only really have their best investment view. But often lots of other providers may have one best investment view, and then 3 years later they've got another fund that they offer. So we look at sort of the longest running pension fund survey in South Africa. It's the Alexander Forbes Large Manager Watch, and before even taking fees into account, our passive balanced index has delivered above the median return of the active managers since inception and over the 10 years.
So you reckon you top half before fees.
Correct.
Consistently.
And that survey looks purely at active managers, and there's quite a large fee advantage when you compare.
Yeah, so let's talk about the fees now, because I mean that's always, when I see your advertising and your marketing, a lot of it is centered around the fee issue. Tell me about the fee on this fund and how that plays into sort of what I can expect from a return perspective.
Sure. So if you had to come to 10X and you say, I'm going to invest in an RA into the 10X high equity index fund, you'll never pay more than 1%. So the way we charge our fees are effectively on a sliding scale. So the more assets that you have, the lower your fee goes, but it's never more than 1% as a percentage of your assets. But I think the important thing to note is that coming to 10X with the one solution that we offer, we've effectively taken care of multiple steps in the value chain to access your retirement investing. If you think about it, because we only have one product, all right, which has been designed to increase the probability of all of our members having more money when they reach retirement, there's not necessarily the need to seek advice in terms of which fund to choose for your retirement, because we only have the one option which we think is our best foot forward, that we put forward and all of our clients are invested in. That also covers pension fund administration as well, so there's no need to go access our fund via a LISP or some sort of platform, because we do that whole end-to-end process where we do the administration
that is often
as well as the investment
cost,
management.
Right?
Correct.
That administration platform fee.
So I mean
don't have that.
That's one of the big issues when you are comparing different options out there. I mean, a lot of times people will just look at what is your asset management fee and then compare on that basis. But actually, you've got to say, well, what are your fees across the whole value chain? I think National Treasury did some work a couple of years ago where they estimated sort of the average all-in fee, taking into account advice, platform and administration, as well as investment management for retail investors in South Africa, was as much as sort of 3%, and that was the average. Wow. So you can imagine that all averages are made up of fees way in excess of that average number. So if you're sort of comparing an end-to-end solution, you're kind of looking at the industry average of about 3% relative to our maximum of 1%.
Okay, and tell me about my sort of, what would my the administration, what's it look like? Do I get statements? Is there online access to check balances? How does that all work with
Sure.
this?
So we like to keep things as simple as possible at 10X and try and make our clients' life as easy as possible. So We have an online portal that you can log into at any time and see your balance on a daily basis as the market moves. But having said that, we also don't think it's always the best to look at your balance on a daily basis, because remember, you're saving for retirement. Further than that, we send out sort of annual benefit statements that fully disclose what your contributions have been, what your investment value is, what fees you have paid, and what impact those fees have on sort of your final outcome, as well as if you continue contributing what you're contributing, where we think you'll get to when you reach retirement. So we fully disclose everything on our benefit statement, and I'm not sure if you've had different benefit statements from different providers, but often they are really, really confusing to understand.
Yeah.
So we like to try to keep it as simple as possible. And then we also realize that we're living in South Africa. Maybe not everyone has access to the internet or laptops or PCs. So you can also, if you're a 10X client, you can simply just SMS your ID number to a specific number, and we'll reply with your balance.
Okay, so maybe the last question is, there are a couple of competitors out there offering similar type of passive investment multi-asset funds. Why would I choose 10X? Why would I choose the high equity 10X high equity fund?
Well, I think it's really about the simplicity of the fact that the end-to-end process is taken care of. There's a lot of research that's actually being done that says that having different access to different choice of different portfolios actually isn't in the best interest of a lot of investors, because generally as humans, we always like to have the best performing fund. So if we've gone with the route of a fund that hasn't really performed well and we can move to a fund that's performed better, generally we switch, and generally that's often at the worst time. So I mean, being invested in a simple, straightforward, multi-asset, high equity index fund that's been designed to increase your probability of ending up with success, and really a simple solution where you know that your portfolio is being rebalanced by the manager, and you basically don't have to worry about your retirement in terms of taking any specific steps, knowing that you'll be appropriately invested for your time horizon, and that when you reach retirement, you don't have to stress about all the different decisions that you had to make along the way. Sort of an end-to-end solution that takes care of it for you.
All right, so Chris Eddy is the head of investments at 10X Investments. Chris, thanks so much for your time. Keeping it simple.
Yes,
right?
that's what we aim to do.
Thanks so much.
Great.